The stock market is rigged by Wall Street. If you want to win more option trades, why not copy them? That's why we created Rigged AI. Rigged is a completely new way to trade options. And what you'll see in this video is when we're on full send mode, like April 15th, the returns can be incredible, 705% in one session. Now, we can't just copy their trades blindly. We need to follow strategy, and that's where Rigged comes in. So we're going to review full send, which means trend day, like you see here, or perfect tags. These are the only sessions you need to trade. Anything else, just wait until after 1300. Seriously, it can make your day, your week, your month, your year. And if you're crazy enough, one session could change your entire life. That's how big this is. Now let's review. When tradability is on easy mode or full send, one of two things are going to happen. It's either going to be a trend day, like we'll see here, or perfect tags. So this is how we define a trend day at Rigged. When we look at the open, you're pretty flat, and then there's a big 3-strike move, okay? That is the direction we expect price to close at. The only thing that we're interested in are alerts that follow the price action. And you see this here. Boom. I mean, this is a perfect trade. This goes 700% max gain. And the reason why it works is because when we're sitting here and we're kind of ping-ponging, there's a video, ping-ponging at 512. If this thing breaks higher and we break and we go way past the blue, then we would consider it to be perfect tags, and you would get a bull bomb right here. But the bias needs to be, and we say this, following the price action, this would be bears minus PS, position score negative. And if you followed any of those alerts, you made money, right? Because here, even when we're chopping at like 510, you're still getting a giant move to here, and then even we can go until the close. So one of the things I bring up all the time, obviously, in hindsight, 2020, perfect information, holding this is going to pay a lot, right? But these are actually better right here and here. They're coming right above the strike. They follow the price action. Wall Street made it look here, and they made it look here like it was going to bounce. But we don't expect that to happen. Year to date, we're recording this Sunday, April 21st. There's only one session on SPY and one session on QQQ where we went down 3 strikes and up 3 in the same session. So you go up 3, down 3 in one session. It is very rare, obviously, when we go 3 from the blue line, either way, to see a recovery. So what does that tell us? Like, our bias needs to be, hey, we're down here. It's kind of chopping. We're looking to follow the price action. And this is a trend day, perfect on full send. Next, let's look at perfect tags. Here we are looking at April 9th on SPY. And what you'll notice, first move is down. We go down 1.5, call it 2, right here to 519. And then we nuke super, super low, 515. So you're going from 520 to 515. You're getting 5 strikes, and it's not even 11 a.m. If this was a trend day, we would expect price to close this direction. But if you go back to the last day we just looked at, we did not move this low this quick. There was a bounce. So does this always happen? No, obviously not. But this is what I mean when I say perfect tags. Here, the bull comes in. Obviously, this bear, you're late, right? You're late. You could have taken it here. I mean, when you get this low, you're 5 strikes down from the blue line. The further down we go, the more risk there is for bears. There's been no bounce. There's always a bounce at some point. And this is why it's perfect. Bull, bull, bull. Do you see any bears coming in? No, right? None. And you're going from 515 all the way to 517. Before what happens? We get the ping pong, right? We're ping ponging right here. $1,400, get a little bit of mixed flow. You know, you're getting bulls and bears. But this is a perfect tag. I mean, it's right at the strike, 516, and 516 to 519 in, 20 minutes? I mean, that's 300% plus. Comes down a little bit after the Robin Hood close, a bull and a bear, Wall Street's fighting, and then it rips up even higher. That's perfect tags. The bottom is tagged by bulls each time. If we closed in this direction at the start, right? So if we came here and then we come back down, then it would be a trend day. But we have to follow option flow. We have to copy trade Wall Street. And when we get right here, it's 1445, and look at the alerts coming in. Do you see any bears here? No, it's super bullish, and we get the rip, and you make a ton of money. You could have skipped the entire thing and just came in after 1300. Okay, break even, break even, break even. Okay, maybe even you lose on this because we do move to 516. But until you see a bear, we're going to stay bullish. That's what Wall Street's doing. And they rip this thing practically back up to the blue. So this, perfect tags. Now we're going to chop through and look through a couple more just right on the application. 415, trend day. Lock in. Follow the price action. Bulls plus BS, bears minus BS. Hold beyond 3 strikes. Expect a trend day. So we don't trade the open. It's up to you. Ping pong, we're looking to get back in. And I mean, that's 500%. That's just amazing, right? What's better than that? 500%. This is 700% because you're getting the strike below it, 522. Let's switch to bears only. I mean, you're getting 549% at 1309. And then these don't really make money, right? And that's why we use PS, position score. You're at minus 19.46. The more negative it is, the more risk. Right here, we're at minus 8.81. So every time these alerts are coming in, we need check tradability. And then also, just ask yourself, are you late? And it's not necessarily that we want to look for a bounce. Because remember, one session this entire year on SPY where we went 3 strikes above the blue after being 3 down. They move it down, and then nothing else happens. But we do close at a low. That's a trend day. Here's another example. We're looking at April 12th. First move is down. And what do you see? A small swing. And we can try these, right? Because at this point in the session, it's early. It's 10:52. Could it be a crazy reversal? Absolutely. We see it all the time. And this goes for 44%, and you're getting that really quick. But notice, we get close to this 514 strike. Looks like it's going back to the blue line. But do you see any more bulls coming in? Do we break past 514? No and no. So automatically, we need to be thinking, hey, we're looking to get back into bears, back into puts. And this is an awesome trade. 200%. Should be higher, but guess what? IV has been super, super juiced this entire month of April. Now we're going to look at like the craziest. This is the craziest thing. NVIDIA, April 19th. Haven't seen anything like this in a long time. There's an entire video. We'll put it in the comments. You get this insane volume spike, but it's exactly like everything before. What happens? We open. This is fairly flat, right? Fairly flat. We don't even go up 2 strikes. I mean, you can call this 2. NVIDIA, more like 3 is what you want to see. But this is not really a move, right? This is chop because we're going up. We're coming basically back to the blue. We're going up. We're coming down. That is a favorite Wall Street technique to screw people, to tempt people before they make their move. And you can see in the white line, it's like, hey, volume came down. And then it spikes as soon as we start that first move. First move is down. So we're $9 higher, and we're $17 down at 10:36. And what do you notice? Small swing, and then the down move. And this is like the most amazing trend day you'll see, because amazing tags, we get here, ping pong again. They're trying, but that's a 335. There's not a ton of bullish activity. And then what do you get here? Said it in the video. Doesn't get better than this. 969. That's someone buying $1 million in bullish or bearish flow, selling calls, buying puts. And that's right next to a 450K and a 361K. That's perfect. And that's a 958% return. Just buying and holding because we close at a low. Maybe it's 879%. Let's see. 1339. 842%. 500%. 300%. Once you get a little bit lower, more of a drawdown. But that fits perfectly, right? Because first move is down, small swing. If you're taking these, if you can survive at maybe a 20% drawdown, you are in profit the rest of the way. But that's what we want. We want to lock in and follow the price action when volume is this high. It doesn't always happen like this perfectly. This is amazing. This is one of those sessions change your life if you're not idiotic and take 100% gains like someone that we know very well. Now we'll switch it up and go back and look at perfect tags. So, right, trend day, first move, a little bit of a bounce, close lower. Let's go to the perfect tags now. We're looking at April 9th on SPY. Move down, chop, chop, chop. Crazy move down. Now, if you remember, looking at the trend days, we normally don't see a move this big. You are minus 5.93 from the blue. It is 10:49. Session's barely been open. If you're seeing this, there's a lot of FOMO if you missed it, if you did not buy puts. But if you can just train your mind to say, hey, I'm +5, I'm not going to buy a bull, and I'm -5, I'm not going to trade a bear, you're going to do well. Because while it may work sometimes, there's always more risk, right? There's always more risk. This is the important thing. Okay, this does really well. I mean, it goes 191 to the close, but you're getting 517 quickly. You're not losing on that trade. But when we move into the middle, right, look at all of the bulls come in. I mean, it's just bull after bull after bull. And while we haven't broken out past 517, this is ping pong, watch the ping pong video. We want to have a bullish bias. We're looking for one of these to go, and we can trade every single one of them. I mean, you can trade this, get stomped out. You can trade this, get stomped out. But there's so many more bulls compared to bears that we're looking to get into calls. And you get the perfect tag. What does this thing go for? I mean, you're getting 228%, no drawdown, buy and hold into the close. Does it get better than that? Actually, that's this one. Excuse me. 541%, no drawdown. So, I mean, you get two. Back to back. Even if you're late, 512, fingers not moving fast enough, boom, you get the next one. Perfect tags again. Okay. First move, down, 10, 15. And then this is strange because it's just like a slow grind up, but it's very bullish, right? There's more bulls. We look at bulls only. Count them, count them, count them. Look at bears only. There's more bulls and price is going up. You can trade this if you want, right? But as soon as we get close to the blue, it doesn't go. We need to be a little bit cautious. Pull it back some. Now, if you're a gangster, you're holding this the entire time, you're getting 358%. Maybe you're doing that with runners. But look, as soon as this thing breaks, there's some kind of event, probably a bond thing. You get the tags, right? We get what we want. And you're getting 225%, and this is quick. This is quick. That's perfect tags. Now remember, here, we expect it's going to be a trend day. We want to go back down, right? Because you're following this initial move. Volume's high. But we have to keep an open mind, right? Because when we get to this ping pong, we're going to chase whatever direction it breaks. And we can take this one and lose quick and switch. But this is an example. Perfect tags. One more. We only come down a little bit here. Volume is super, super, super juiced. And then we come ping pong again. 495. Volume's high. Is this a perfect tag? It's close to it. It comes in. I mean, maybe you're waiting to get it a little bit higher. But then it goes, right? Then we start nuking. You could have taken this swing. Could have taken this one. At the end, I mean, look, this typically does not happen. It is rare to see 4 bulls right down here, a little bit below 3, and to get this rip almost practically back to the opening price. And it's like a high volume mean reversion day. But when we look, right, you came down, you get this perfect tag, you're getting 91%. And then the bears, this is beautiful, this is nice. We can keep this bearish bias because why? Because we don't break higher, and if we get back to the blue or slightly above it and we don't go up, you're gonna go down. We're coming down, we're coming down. These here feels a little late, right? You could have had it at 494. Wait. These, because obviously we don't know that this rip is going to happen at the end. We're expecting just to close lower, right? Close low. But you're getting 200%, 1443. I mean, you're getting that in 39 minutes. We're telling you the win rate is 100%. No drawdown. But this is 3 strike roll, right? Once we get 3 down from the blue, dangerous territory, even in high volume. And you get perfect tags. So we can hold this to here, but it's just like if the bears do not continue to take it down, it's going to go up, and Wall Street loves to F as many people as possible, and that's what they did here. So looking at this session, oh my gosh, we have the bearish bias. We expect to close lower. That's basically confirmed here because we're not trending up. We're not breaking 495 to 496. These are nice. Boom. Starts melting down late. We can trade these, get in quick. You kind of get screwed here. But that's why we always want to play defensive. That's it. When Rigged sends the tradability notification, looking at it here, now it sends all the way up until 1300 right here. It gives us perspective on strategy for what we expect to happen with the price action. Trend day means, hey, let's look for this thing to close lower or higher, whatever direction the first move is in. But also keep in mind, it could just be perfect tags. And that's what happens day in and day out. A little bit of a longer video than expected, but what else is new? So we never know this is going to go, right? You never know what's going to happen at the end. But the way to think about it is this. If it's the end of the session and you're looking for the reversal trade, so we're down, goes up, we're up, it goes down. If it's going to happen, it will be instant. There will be no thinking. The mistake is you're going to sell 100% when it goes way more. Because obviously, moving from 1512 to 1529, that short amount of time, 200% plus. Whereas we look at the opposite on the 15th, and if you're trading this at the end and we're looking at bulls, because they're coming in, right? They're coming in. They're trying their best to bounce this thing. But every single time we get a little bit above 506, that thing comes right back down. I mean, the bears aren't winning. The bulls aren't winning. If you're going to try and catch the reversal, and we can trade it every single time. Obviously, we never know what's going to happen. If you win it, it will be fast. So win fast or lose fast. And lose fast means, hey, 10, 20% max, break even, take 20% profit. Just have to be thinking if you're on both sides here. Okay, we're at 505. It's definitely going to rip up. It doesn't. Oh, it's going to go down. It doesn't, right? Don't necessarily need to do it. If you want to do it, that's the strategy. Win fast, lose fast when you're looking for a reversal. But really, on sessions like this, if you didn't catch this move and you didn't catch this move, go back to the drawing board, study up a little bit, keep it frosty. If we're not on full send or easy mode, see that in the tradability channel and by email, then just wait until after 1300. Simple as that. And if you can do that and not get stuck here looking to go against it and lose a bunch of money hoping, oh, it's going to go, it's going to go, it's going to go, you can absolutely crush options trading.